the longer it is, the longer it takes to upload it. Okay. If I fall, just pick me up.
Patch whatever's hit.
Yeah. If there's blood, just get a Band-Aid. I got it in my office. Okay. Okay, so number 26, Fenwick, chapter 10, number 26, page 500. Fenwick Company organized and began operating a subsidiary in a foreign country on January 1st, 2015, investing 40,000 local currency units. Subsidiary immediately borrowed 100,000, so now we're up to 1.4 or 140,000 local currency units. 10% interest payable annually. Then purchased local currency units, a building, so they used all their money and bought a building. 10-year anticipated life, no salvage, depreciated straight line. Also on that day, they rent a building for 3 years to a group of doctors, 5,000 local currency units. So they took that building that they had bought and they rented it out. They're going to get 5,000 a month, which is how much in a year? 60,000, okay. By the end of the year, 50,000 have been received, so we have a receivable of 10, right, they've collected. On October 1st, 4,000 was paid for a repair made on that day, I don't know what. And they had a dividend of $5,000 on December 15th. The functional currency for the subsidiary is, and they've got it in the right way. The dollar amount is not a 1. Yes, so we can use those amounts. I don't know that I'm going to write my chart of everything because all I really need to do on different days is use the correct spot rate. So I'm not going to do that chart like I did in the journal entries. But the way I would do this, you don't have to do it this way. The way I would do this is I would do journal entries, post to T accounts, and prepare my financial statement. That's how I would do it. So that's how I'm going to do it for you. Okay? So the subsidiary, I'm not accounting for the parent, I'm accounting for the subsidiary. What happened to the subsidiary? And I don't think I have this, so you're going to have to help me with some numbers here, please. I've got some numbers there that I can get when I need it. Okay, so the first thing that it says, I'm just going to go one step at a time. On January 1st, investing, so it would be debit cash. This is all in local currency units, not in dollars. And what we're going to do is we're going to do the journal entries in local currency units, post them to T accounts in local currency units, prepare a trial balance in local currency units, and from that do the income statement in local currency units, and then translate it. If you can do it in a shortcut way, go for it. I can't. Not and be accurate. And it's not that much to do the journal entries, in my opinion. Okay, so debit cash and credit equity. It would be probably stockholders' equity or whatever. It's stock. Okay, it's the parent. The parent. Okay. Let me see what they did there. Common stock. They call it common stock. I'll call it common stock. 40,000 local. This is all in local currency units until I get my income statement done in local currency units. So I'm not putting a dollar amount there. That was on 1-1. Immediately they borrowed 100,000. Debit what? Cash, credit. No payable for $100,000. I'm trying to get you engaged so you'll wake up. Go get a Mountain Dew. And then it says they bought a building. Debit, credit, for
140.
Okay. So far, so good. They rented the building, $5,000 a month. By the year end, 50,000 been received. Let's do the 12 rentals. Debit, rent receivable, credit rent revenue. You with me? 60,000. And then debit and credit for am I going too fast?
I'm sorry, what was the 50,000 from?
It says by the end of the year, 50,000 had been received. That's received in cash, local currency cash. I'll slow down. Okay, on October the 1st. So this is throughout the year, right? Throughout the year. This is all on 1/1, 1/1, 1/1. That's all through the year, combination of journal entries. Okay? And then it says on October the 1st, we made a repair. So debit, repair expense. How much was it, 4 or 5?
4,000.
4. And credit. Yeah, we paid for it. And also on dividend on December 31st. Debit. This is declared and paid a dividend. Debit. Dividends or retained earned dividends. Okay, it's called dividend. And credit. Cash. Okay, and that was 5,000. So far, so good. So we have taken the transactions, we've made the journal entry. Now let's do the T accounts.
Have depreciations.
Oh, thank you. I heard that. We have 2 adjusting journal entries on December 31st. The first one is for
Interest.
the first one for interest expense and interest payable, right? The second for
Depreciation.
depreciation expense and accumulated depreciation. This is chapter 3, principles of financial accounting. Okay? Okay. What would our interest expense be? It was a 100,000, and the rate it says is 10%, is 10,000. What would our depreciation be? It says there's no salvage, and it says it has a 10-year life. 14,000. Okay. Thank you for keeping me on target. I'm going to move over to that way. Are you going to be able to see me that way?
Yep.
Thanks, Paul. Well, you get a whole jar of candy.
Move it just a little bit.
I'm going to do from here to here.
I'm gonna move it some more.
Is that part of me? Okay, so I'm starting to create general ledger accounts as I put them up on the board. Are you following me? I'll leave that for my income statement, or my trial balance. Okay. Thank you.
Don't get too close.
Do you have any questions about what I'm doing right now?
Those appear to be T accounts.
T's. And why are they called T accounts, class? Because it's a capital T?
Because we drink tea.
Oh, yeah, whatever. Depreciation expense and accumulated depreciation. I think that's all that I need, right? Okay. Is this making it pretty easy? It takes a little longer to do it this way, but it'll be right. Okay, so cash, yeah, check me here. 40,000, 40,000, 100. I'm just posting. You did this back in Principles of Accounting. Building 140, credit cash, rent receivable 60, 60, cash 50, 50, repair expense 4, 4, dividends 5, 5, interest expense 10, 10, depreciation expense 14, 14. Yes?
Can't go that fast.
Well, I'll give you a moment. And then we're going to compute the balances in each of these. This one is 10. All the others are just one number, so the balance is what it needs to be. And this one is, I don't know, 190 minus 41. touche. Yep. Cheated. Okay.
Cheater. I added it up.
No, I said I'm cheating.
Oh, yeah, I thought you called me a cheater.
No, I cheated by looking to make sure that
It is a
cash was
shame.
41. Okay? So far, is everybody caught up? Who needs a moment?
Right.
Craig, no, he did a thumbs up. Okay, so now we're gonna do a trial balance. Cash, 41. Common stock, these are my debits, these are my credits. This is chapter 3, after chapter 2 of principles of accounting. Okay, where you pull your trial balance. Notes payable, building, rent receivable, rent revenue, repair expense, dividends, interest expense, interest payable, depreciation expense, and accumulated depreciation. And then we're going to subtotal those. I don't have that number. 224? Should be. I can do the right side faster than the left side. Am I right? And now we just do the balance sheet, the income statement, the statement of retained earnings. Okay? What goes on the balance sheet, class?
Cash. Common stock. Notes payable, building.
Rate receivable.
Anything else?
Accumulated
No,
depreciation.
that goes on retained earnings statement.
Accumulated depreciation.
Okay, balance sheet. So this is income statement, income statement, income statement, income statement, and income statement.
Oh, interest payable balance sheet.
Where did I do my interest payable? Oh, you're right. I didn't catch that. Balance sheet, thank you. You get an extra piece of candy today.
Generally, we would have done that trial balance in statement order, wouldn't we?
Oh, yeah, but I'm not asking you for a trial balance. I'm not asking you for journal entries. I'm trying to help you to solve the problem and get your income statement, which is the only requirement for this exam. So I'm doing it the fastest way I can.
Okay.
Right? If I had asked you for a trial balance, yes, you should do it in chart of accounts order. We don't have chart of accounts. But you would do assets, liabilities, permanent equities, dividends, permanent equities, revenues, expenses, yes. Yes. Good teacher.
He loses a piece of candy for that.
You think so? Okay.
Twice.
So how many is it down to right now?
Lose that up.
Yeah, the whole jar, you might as well.
So all they've asked us for here, all I've asked you for on the test is your income statements. I'm gonna erase this. Does anybody need to copy this? I know Natasha took a picture of it, so. Don't you love cameras? Your camera on your phone? What would we do without them? By the way, I went to Burns Steakhouse last night. What a lovely. How many of you have never been to Burns Steakhouse in Tampa? When you finish this program, you need to go.
Yeah.
It's a good place, yeah, treat yourself. And make sure you see the wine cellar, which has, it is the largest private wine collection in the world. And across the street, they have, if you include their wine cellar on location and across the street, their warehouse, 500,000 bottles of wine. The most expensive is $30,000. And the
They only sell that
oldest.
once a week, right?
Yeah, right. Somebody was getting, they have a rare room, and somebody opened the rare room lock while we were in the tour, because they give you a tour of the kitchen, a tour of the cellar. Somebody was buying one of the rare bottles while we were there. They have them in Ziploc bags because the adhesive for the label and the label itself, some of these are, well, the oldest bottle is 1815, it's a port. But it only costs $2,700. It's not
Only.
30,000, and it's the only one in the world. It's the last one in the world left. Isn't that interesting? Anyway, really good steak and really good carrots.
So what was the last event you went to Burns for?
Well, what we went for yesterday was we took our other daughter, who is not really a daughter, Emily is our pastor's middle child. She lived with us for a short time, went on vacation with us. Her birthday. And her husband's birthday, who happens to be our associate pastor. And we took her parents, that's our pastor. We've always wanted to take our pastor and his wife. We wanted to, Emily and Dean had never been there before, so we just splurged to let them know we appreciate that and love them. So, and we got to eat too. Who knew? It was awesome. Okay, that's somewhere you should go, because where I went when I passed the CP exam was Chalet Suzanne, and it's closed now. That was my treat. So you need to treat yourself when you graduate. And treat yourself again when you pass the CP exam, okay?
Treat yourself day.
Yeah, there you go. Okay, so our income statement, we would want to do revenues, expenses. So our revenues that we have are rent revenue, 60,000 local currency units, yes? So I've got that. I've got repair expense. I'm not doing it in an order here. Usually you do it in the biggest dollars first, but I'm just putting it down as quickly as I can, and that's fine on your toes. Interest expense. Depreciation expense. So I can say there's my revenues, depreciation 14, total expenses 28, net income, there's no tax. Make sure I'm doing this right. Balance sheet. Income statement, yeah, there we go. 32. So I'm good, right? Okay. 32,000. This is in local currency units. Then we want to do the exchange rate and the dollar amount. Yes? Dollar equivalent. Whether it is translation or remeasurement, I don't remember which one this was. Translate, but either way, your income statement, yes, you've got some quirky things for the remeasurement in cost of goods sold, and the depreciation, you'd have to go back to the root. You'd use the date that you bought the building, okay? Translation, pretty much is just average for the year. Your attempt is historical. But these two are, this one happened on a different day. So we're going to use the rate of that day, because we know that day that we did a repair. Okay? So you're going for historical, but because this was throughout the year, oops, move those up. Because that was throughout the year, we use the average for the year, which was given to you as
1.9.
1.9. And you multiply that, I'll just look there, and you get $114,000. Your repair was on a particular day, and that date, the spot rate is at 1.85, I believe, which is $7,400. Your average for the year, again, 1.9 for this one. Oh, actually, depreciation, yeah, it's 1.9. Okay. This would be different on the remeasurement. You would go back to the date that you purchased the building. Okay, but this is a income statement foreign currency. I didn't write down whether it was translation or remeasurement. So I didn't. 19,000, 1.9, 1.4, 26,600 dollars is don't know, but I could compute that. 0, 8, 17, 3, 2, 5 is $61,000. That's what I want, right there. That's what I'm asking you for. Questions about that?
Do we have to talk about the net income at all? I mean, obviously put it down, but so.
Net income, what do you mean? There's nothing here.
I guess just the spot rates that you use and how they influence the.
Yes. This number is simply a subtotal. This number is simply a subtotal. Going across with multiplication, down with, for here, 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 and here, you're footing. So the purpose of putting it into chapter 10 is it's after the consolidation chapters. So this is your income statement that you would do in your consolidation worksheet. You put these numbers in your income statement worksheet to consolidate the two. Your balance sheet part would have common stock of 40. You'd eliminate that with the S entry. Blah, blah, blah. Right? I mean, that's why we've got it in chapter 10.